The confluence of regulatory, market, and competitive forces propelled by the introduction of new payment infrastructure capabilities, the migration to new payment standards such as XML ISO 20022, albeit delayed by the current pandemic, and the pressure to effectively compete amid growing market disruption, present financial institutions significant opportunities and challenges to transform your core payment infrastructure and introduce new capabilities. In this session, we will debate the key issues impacting the ongoing transformation of the payment business and share your varied experiences and different approaches to prepare for the future. To get us started, we have our TAB research head, Mobasha, who will share a short presentation of some of the key trends driving transformation in the payment landscape today.
Thank you, Bunping. As you mentioned, from a payments landscape perspective here in Asia Pacific, certainly about a decade ago, the landscape here was dominated by simple cash, checks, bank cards, different preferred payment types. But that payment landscape has dramatically transformed in recent years. It would be hard to imagine that a few years ago, cash has become really almost obsolete in countries such as China, with mobile wallets becoming ubiquitous. You've got payments that are increasingly smaller and essentially coming from end consumers. And really looking at retail consumers that are driving those retail and real-time payments. We're also seeing, of course, the introduction of distribution ledger technology, which is enabling payment systems and is contributing really from a transformation perspective. To give you an example, the rise of central bank digital currencies, which is really shaping the cross-border payments scene. And as more countries in Asia are focused on building up that anytime, anywhere, anyone real-time payment systems, the potential of, say, using QR codes, reading apps that are backed by those real-time payment rails that is facilitating payments for corporates, has provided a very strong use case for moving batch and daily processing to real-time systems. This is also enabled governments that have created national payment infrastructures that are now supporting mobile instant payments, and really allowing them to harness the widespread use of smartphones and technologies such as digital IDs, increased tokenization and QR codes to be able to make and receive, of course, low-cost real-time payments between bank accounts and or to digitally top up mobile wallets. And as Bunping mentioned, from a regulation perspective as well, we're seeing the global adoption of ISO 20022 standards, which will be driving payment efficiency, interoperability, and streamlining of inter-FI communication. We're also likely to see a continued reduction in costs of cross-border payments as flows become more transparent. So payments remain, of course, an important and a very substantial factor in the bank's operating cost base, and sometimes representing about a third of total operating costs. And that's partly driven due to the high technology spend associated with providing payment services. But having said that, a disproportionate share of effort and resources is required to maintain and improve infrastructure, to manage those upgrades, to implement the rule changes, and to rationalize the use of legacy technology. While this does leave insufficient resources for sorely needed digitization efforts, we are seeing that the investment in new customer services and applications does pay off. So despite this challenge, most FIs across the region have undertaken that journey towards upgrading their existing legacy payment infrastructures that are presently saddled with fragmentation and the lack of scalability. We're also seeing payment infrastructures that are enabling greater platform adaptability, flexibility, and operational efficiency with faster processing and clearing backed by more streamlined data movement, which is aligned with key industry standardization. More importantly, these new payment infrastructures are enabling FIs to be better prepared for the ongoing and evolving regulatory, IT, and market-driven sector changes such as instant payments, open banking adoption, PSD2, and perhaps proliferation of alternative payment methods. So ensuring the compliance and shielding the customer experience really from this type of disruption will allow banks to free up the capacity they need to develop new products and to enable new customer experiences. Interestingly, we're also seeing, as I mentioned, these new payment systems that are being rolled out across Asia, and I'll just share a couple of examples. The HKMA in Hong Kong, it launched the faster payment system, to address the increasing market needs for more efficient retail payment services. So you have all banks and e-wallet operators in Hong Kong that are participating here, and it's enabled customers to make those cross-bank or e-wallet payments easily, simply by entering their mobile phone number or the email address of the recipient. In India, you have the Unified Payments Interface, the UPI, which is a system that powers multiple bank accounts into a single mobile application of any one of those participating banks. And they've merged several banking features, seamless fund routing and merchant payments under one umbrella. And they're also catering to peer-to-peer collection requests, which can be scheduled and paid as per convenience. Similarly, in Indonesia, you have Bank Indonesia, which is preparing other initiatives based on its 2025 payment system roadmap, which includes a data hub and a real-time payment system called BI Fast. In Thailand, you have PromptPay, which is a rather modern, convenient, and low-cost payment infrastructure. It's also enabling the public and business sectors to transfer funds using a mobile phone number, a national identification number, or a corporate registration number. But interestingly, the competition within the banking sector is also playing an important role, at least in terms of propelling the widespread use of PromptPay, and that is also contributing to reduced or lowering of fees for cross-bank fund transfers via these electronic channels. A review of some of the new players that we're seeing that are disintermediating banks in the payment space is quite interesting to watch. As various providers are scrambling now for market share, we're seeing a consolidation in this sector that is driving new volumes. You have the card schemes such as Visa and MasterCard that have made moves into fintech with the recent acquisition of bank account data aggregators, whether it's Visa's acquisition of Plaid and MasterCard's acquisition of Fincicity. And so this does show us a trend of expansion to a global, diversified business strategy in financial services. On the other hand, you have domestic players and real-time bank interbank transfers such as RuPay, Shazam, WeChat Pay, M-Pesa, which is reducing dependence in global card networks. Last year, recently, Japan-based Soramitsu also rolled out a next-generation payment network. That's enabling real-time payments online and via smartphones. In Cambodia, interestingly, where you have 78% of the population over the age of 15 that does not have access to banking services, and we're seeing the rollout of the Bakong platform that has enabled the enrollment of thousands of users. And more recently, with Apple's release of the Apple Card, and with a number of companies following suit, such as Venmo and Razor, as well as Samsung Pay and Shopify. So there's quite an interesting mix of big tech fintechs that are now operating in this payments space. So speaking of these big techs, say Alibaba's Alipay and Tencent's WeChat Pay, that have really created their own payment services, with many other companies following suit, and that are creating their own pay businesses. And so whether it's GoPay by Gojek or GrabPay by Grab, BigPay by AirAsia, and LinePay, just to name a few. Governments and regulators are really playing a significant role in encouraging digital payments and directing new pathways for innovation. So with instant and real-time payment schemes that are live and across 15 Asian markets, you're seeing real-time account-to-account payments, which is becoming the industry norm. The use of real-time payments is also expanding from not just from consumer to consumer use cases enabled by third-party apps, but also to consumer to business, both for online and offline payments. So given this emerging threat, the banking industry is of course responding to this fast-changing payments landscape, and there are a range of payment initiatives launched by the various banks and payment service providers. Just to call out a few, we have, for instance, Siam Commercial Bank that is seeking to capitalize on on new opportunities and growth in the cross-border payment corridors powered by RippleNet, especially for markets outside Southeast Asia. Similarly, Krungsri has teamed up with the Japanese tech giant NTT Data to launch MyPrompt QR, a cross-border QR code payment platform for Thai users in Japan. In the Philippines, there's Union Bank's digital transformation to drive inclusive banking, which has really led to the bank's fintech subsidiary UBX to launch 3 platform startups. That includes the I2I, which is linking rural banks to the country's main financial network that cuts across digital payments and logistics platform, BUX, that supports e-commerce merchants. So while you do have some of the older tech firms that are settling in on the seamless integration and into the lucrative financial sphere, I believe the path for Asian tech firms and Asian institutions in the financial service space appears more straightforward. Certainly, there are limits and opportunities, but if we keep in mind the Chinese market, which is still being explored. But from a regulatory regime perspective, we're unlikely to see any new surprises in terms of new operators being able to enter and to support the growth of real-time payments. Certainly, it will be an interesting landscape to see as the shift from the application of legacy systems to new real-time, scalable, adaptable payment infrastructures are implemented and rolled out, which will drive those operational efficiencies and lead to observable benefits for the banking industry and the payment sectors, payment service providers as well.
There are new infrastructure being set up. There are also new payments provided today. With the introduction of open banking and new financial services license, for example, the payment area is now open to the non-banks as well. And today, payments margins are very low. With historical low interest rates as well, you need to develop new business model in order to compete. So I'd like to get our panel to talk about some of these trends and how is that impacting your respective institutions, and more from a regional cross-border perspective, if we can get Chintan to share your comments and your response to the trends that you see. We know Deutsche Bank has got a very effective multi-currency payment engines, and how are you looking at regional payment, cross-border payments opportunities, as well as this move towards new payment infrastructure?
We've seen clearly emergence of new age payment methods. We've seen significant improvement on payment transparency through, especially on cross-border payments with the introduction of SWIFT GPI and adoption of that by banks and corporates. Third, we have seen significant interest of clients to adopt these payment solutions to improve their end consumer experience. So clients are now no more looking at payments as just treasury payments or the vendor payments, but they're looking at payments as an enabler of improving their consumer experience and getting more digital in the way they drive their business. We've been working very closely with our clients on helping them transform their business model, not just treasury payment practices. Fourth, that has enabled us to also look at our backend infrastructure around the new age payment method. So we had to work on building our payments infrastructure to cater to large volumes of low value payments as compared to simpler forms of vendor payments earlier. Second, we needed to adopt to a much greater 24/7 infrastructure across the region. While it is easier said, it's much more difficult in terms of implementing it when it comes to solving that for our corporate clients. So that 24/7 infrastructure played a key role. We also looked at our entire payment lifecycle management in terms of simplifying it, such that the orchestration layer for the payment lifecycle sits in this engine rather than in multiple electronic channels, which was also the legacy setup that we had. So we migrated the entire routing logic from channels into our payment lifecycle management layer, as we call. That has been a development. Particularly on the cross-border payments, we have continued to look at investments on our FX for Cash engine. That is, again, our way to complement all of the digital solutions around payments and integrating payments, FX, and liquidity solutions onto a single front-to-back solution for our clients, which digitizes payments, which executes FX on an automated basis based on rules pre-agreed with our clients, whether the rules are in terms of margin or rules are in terms of picking up hedges. So it's been a great experience. I see this space constantly evolving. It's never static, and to adapt to the new payment methods as they come up, to adapt to client needs, and to adapt to the regulatory changes has been the kind of dynamic play. And hence the entire payments infrastructure.
We also want to get a domestic, maybe from a more retail payment perspective as well. SCB has gone through a retail payment implementation. Tell us what the process that you went through in terms of what drove that project, as well as some of the capabilities and the challenges that you went through in the implementation.
As the presentation earlier from TAB said, right, that Thailand have set up the project called PromptPay, and PromptPay have turned the nation into a different scheme, and all the payment is become zero fee, and we start to have a lot of micropayment happen. So the challenge right now is more on the scalability, and also we start to see a lot of new innovation. For example, all those QR payment and some of the new capability regarding the payment in the system as well. So I think at the moment we try to create the banking as a platform and try to enablement all those new fintech and some of our third-party partner to be able to use our payment infrastructure inside the bank to leverage the platform that we have. Right now, payment is almost, we got nothing, but the usefulness of payment is more on the data. So yes, we now try to enable the event streaming in real time, and in the background try to make sure that all the events that happen throughout the payment flow, we can create the moment of truth for our customer.
Chief has been working on GPI and lately also GPI Instant, and you've been also more involved on the retail payment front. Tell us more.
We just finalized our new strategy that we introduced publicly into the market, which was a result of working with our customers around the world, and we have 12,000 customers connected to SWIFT, and consulting with them for the best part of 12 months. And the industry needs to change clearly. I think it's not an evenly applied set of disintermediation, right? So you have these different segments of the industry. They're not all affecting industry incumbents in the same way. But one theme, I think, is on the customer experience. So, new entrants are putting themselves between a traditional financial institution and the customers of that financial institution, and they're improving the experience that the customer has when they want to make a payment, so they're able to track that payment end to end. They might be getting fees quoted up front. They have choices, and they have an enhanced experience. So that is a particular opportunity for financial institutions to work with. If you're a bank, your operating cost base is increasingly high, right? And there are drivers of that. You need to source liquidity and funding to support payments. Financial crime and compliance is a really heavy burden that just increases all the time, it seems, right? And then the role of new technology, so pivoting to API-oriented technology and cloud. These are some of the major ones, not all of them, but the things that our customers are responding to. So what we've done is we've published a new strategy designed to support our customers, work with those trends such that they can continue to play a very strong role in cross-border and also domestic payments as well. So what we're saying there is that all of our transactions, where possible, will be done on an instant basis. They'll be friction-free, meaning that what we're about is really identify these problems and these frictions that exist at scale in the industry. So that financial crime and compliance problem I mentioned, can you help the industry by mutualising or centralising services such that the cost burden is not duplicated across individual banks and it can be shared? And we think we can do that through a centralised platform service for that as well. So we're about helping our customers with this instant, friction-free account-to-account experience. And then the last thing, just very quickly, you mentioned 20022, the ISO standard. We're introducing that across the globe on our network from the end of the year 2022. So you'll have all this additional data that can be used in a consistent way by our customers to do compliance and financial crime checks, screening, that kind of thing. And you'll also have additional data back to that user and customer experience I mentioned. You can apply that data into that intelligence that goes into the way that financial institutions serve their customers. So we'll soon be rolling out a new transaction management service, which is a centralized platform that allows banks to actually consume some of these things on a shared basis, and all these things don't have to be done on an individual basis, fully API-oriented, cloud interfaces, that kind of thing.
One of the things that we discuss a lot of the processes, there are different systems that require different processes, and not all are automated. What is driving transformation of payments at Mandiri?
A lot of fintechs are trying to take some of the portion of what banks are used to have on the revenue. And then recently, some fintech are playing on the local scheme. Like there are one fintech called Oi and Flip. Basically, they are offering a domestic transfer on a free basis. But of course, they cannot go big scale as they need. Basically, they're using the concept of correspondent banking. So what they do is that they open multiple accounts in many banks, but of course they need to have some kind of capital, right, to execute the payments. So what we did in Mandiri for the wholesale part, we improve our API. We right now already have an API portal that can be used by our corporate customers. So we see more of the corporate customers use the host-to-host connections rather than internet banking. And on the SME or the retail space, we basically collaborate with fintech. Rather than competition with them, we collaborate with them in providing some payments using QR. We embed our QR payments into their system, so their customers can make payments using the QR payments. And then we also have branchless banking agents. Basically, we try to expand our network rather than opening new branches. So we see quite a lot of tractions there, especially in the area where we don't have branches. And surprisingly, the customers are depositing quite a lot of cash there. So more and more initiative towards cashless happening here in Indonesia right now.
Go ahead.
And the government is also the regulator is also supporting us in this by recent I think last year I think they issue a standardized QR payment standard for all banks. In the past there's no standard. I think the government tried to standardize that, so at least everybody in the same position right now rather than before.
We also want to hear from Kanaf at CIMB. He is also in charge of the transformation function at CIMB. Tell us in terms of how you see payment transformation.
The customers don't wake up thinking in the morning what payment materials they're going to use or what. Bank payment is a hidden activity that comes in your daily life when you're buying things or when you're paying for goods or services. So from that perspective, the simple thing that we want to do is to make sure wherever the customer is and however he wants to pay for his goods or services, we are there as a choice. Number two is from a technology and commercial perspective, payments is a is no longer a revenue game for banks. So the real value is in trying to ensure the technology and operations are so streamlined that your cost of providing that payments at scale is as minimum as possible. And two is within that cost, there's a huge cost of fraud and cyber security aspects. And how do we ensure that those payments and the fraud losses are kept minimum as much as possible? So that's where the real game is in terms of where we're going. The last point is, since, I mean, we talk about disintermediation, but I would argue that there is a mix of disintermediation and a long tail of transactions coming into financial institutions, which never existed before, because of stuff like QR, because of stuff like waiving credit cards, and because of transactions or government initiatives like Do It Now or Pay Now, etc. So you have a large number of minute microtransactions coming into the ecosystem, which means the volumes are definitely going up. Now, the game over there is definitely a data game. And the real disintermediation is the customer getting lost to these wallets and other providers and the fintech players up front. So your customer relationship is what is going to be ending up disintermediated. Payments is not getting disintermediated. So the real game that we are trying to play is, how do we keep ourselves plugged into that ecosystem so that the payment is done, but we get to understand and be part of the customer relationship. If you have a customer relationship and we do cross-border payments, and if the relationship is good, the customer is not going to move to somebody else to do your cross-border remittance. He's going to be sticking with you. So as long as you stick to that, then you get the moment.
I also want to hear from our colleagues in the Philippines. First, Dennis, who is the Chief Information Officer at Union Bank, which is doing interesting things on the digitization front. Tell us in terms of the transformation on the payment side that Union Bank is going through.
We actually started really working on a blockchain center of excellence. And one of the things that we did was to create a network for the various rural banks in the Philippines. So the situation in the Philippines is that the number of rural banks in the Philippines are dwindling. It's really going down, but the number of rural bank clients are actually increasing. So what's the reason for that? It's because the rural banks are not able to keep up with the costs of having sophisticated AMLAs. Our belief in the financial inclusion, or actually we call it a prosperity inclusion, is to work with the rural banks, because the rural banks are very much embedded in the communities that they are into. So we have rural banks that focuses on teachers. We have those for farmers, drivers, etc. And what we do is we visited them, and they're really just not interconnected at all. So we created a blockchain-based switch, and now there's like close to 100 rural banks into the platform that allows them to now avail of the services. Like in the Philippines, we have what we call InstaPay, which is the replacement of ATM. And by the way, as a statistics for all of you guys, in the last 3 months, the InstaPay transactions is more than the ATM transactions. This has never happened before. This is the first time. And in the last 3 months, it's happened. And then we have PesoNet, which is like our alternative for issuing checks. So those things have really been growing tremendously, especially during the COVID-19. And part of what we did also, maybe just 3 things. We had the digital account opening. So that means, they can open an account anywhere. We had the mobile check deposits. They can just take a picture of the check and deposit it so they can load. And then we did the cash out services. So meaning they can remit to, all parts of the country. So they can all do all of these things at the comforts of their home. And then during lockdown, we did what we call banking on wheels. So we had like the entire bank. So those that are quarantined and they cannot go out, we bring the banking to them. The Bangko Sentral ng Pilipinas has really been very progressive in supporting electronic payments.
Yes, and on call on your counterpart, your colleague in the Philippines, Lito from RCBC, and Lito were working in the telcos, right? And on payments, and now you're working for RCBC, and also working for it to become one of its first domestic digital-only bank. Tell us more in terms of on the payment transformation.
I shall first start with in terms of contextualizing the payments transformation in the country, in the Philippines. So amidst this pandemic, what we have seen the exponential growth of digital transactions because of the limited mobility of the Filipinos given the quarantine based on different levels of restrictions. We've seen that a number of them have really shifted their transactions to digital. And that's why we have seen those numbers really skyrocketing. For example, for RCBC, we've seen 3-digit up to 4-digit growth when it comes to digital transaction. I think one of the basic metrics of success would definitely be consumer adoption, because one is that we are now adhering or trying to embrace the concept of PSD2, because right now the BSP has came up with a draft guidelines on what they call the open finance framework, which is practically open banking. And of course, the proliferation or the introduction of the standard QR code in the country, where practically it now promotes interoperability across all players in the industry. In the case of the Philippines, I mean, there is harmony and there is what we call co-opetition amongst fintech and bank players in the country because again of interoperability, because of us being able to provide that synergy across all players in the industry. These are the things that we've been trying to do. RCBC has been one of the traditional banks for the past 60 years, and I think the digital transformation agenda has been number one in terms of priority. We have invested a lot in terms of digitalization, and one of which is when we launched what we call the Discartech mobile app. Now, this is actually the first Taglish inclusion super app in the Philippines. In fact, when we launched that in the middle of the lockdown, we were thinking that it might not actually be noticed at all by the public because the public has been very concerned about their safety, their security, and we hit our highest unemployment rate at 25%. So when we launched our Discartech super app, we were supposed to launch it on March 18, but government declared the hard lockdown on March 16. So in July, that gave us an opportunity to launch it. And again, we were not expecting any acceptance from the public because again, given the pandemic, but it was a pleasant surprise amongst, to all of us, that it was embraced by the public. And the number of downloads, mobile app downloads, we reached 3 million, over now close to 4 million in a matter of 4 months. So practically on the average of 1 million per month in terms of download. We reached 1 million after 30 days from the time that we launched it. And so I think because of the the timing, and I think even the proposition that it offers to the public, to the consumers, would be practically unique. So I think that's why even our monthly active user rate is as high as 72%. So positive social sentiment is as high as 98%. So I mean, this would be some of the metrics that we don't really see in most of the mobile apps in the country right now, because in the Philippines, you have almost 200 mobile apps operating currently, on top of having about 4 million mobile apps operating globally. So imagine your proposition here is how can you be noticed by the consumer?
Now, then we want to look at digital transformation or payment transformation, how different institutions are approaching it from a technology and from an infrastructure perspective. Can I call Stephen from FIS to maybe give us some insight on the different approaches of different institutions and what are some of the challenges that are involved in a holistic payment transformation?
So I'm just going to go through a couple of transformation drivers. So we have, of course, legacy systems and legacy operating models, which dominate a lot of the banking landscape, ranging from the core banking systems, which aren't 24/7, also to some of the peripheral systems, channels, reporting, warehousing, etc., which are in different states of modernness and openness and ready for a true transformative offering. On the back of that, you have an unprecedented number of compliance changes in the region. In all of my global experience, I've never seen the amount of compliance which is being put onto the banks across the region, whether that's real-time payments, bulk payments, RTGS, and SWIFT cross-border payments, all happening and overlapping a lot of the time. So it's really a perfect storm of compliance drivers as well as new payments competition. And even just this week, we heard some big news out of Google with their launch of Plex. Obviously, the Apple Card is quite interesting to see how that goes. But more regionally, you have tremendous competition in the fintechs from the likes of Grab and Gojek and Alipay and so on. So it's really a difficult space for banks to become differentiated with their offerings and to remain relevant in terms of their offerings to the market and taking that piece of the payments business. And so one of the things that we see across the region, as I said, is legacy payment architectures, and that really makes it transformation slow and expensive for a lot of banks. Often there's a lot of payment logic embedded in those channels. That's logic which is required to know how that payment should be processed and where the payment needs to be routed to. Is it a bulk payment? Is it an RTGS? Is it cross-border or real-time? Also about how that payment should be processed using the sanction system or core banking or GL, Treasury, etc. A lot of logic which probably doesn't really belong in the channels. The integration becomes a bit of a spaghetti because for every payment type that a channel wants to implement, it needs a separate connection to all those different silos. That makes it rigid and flexible for payment processing. And really, I see all of these payment types actually blurring together. And probably in the future, maybe in a decade or so, there will only be one real-time payment type which dominates both domestic and international payments, I believe. And you'll have all of these different payment types disappear. And then you have a very complicated enterprise integration architecture at the back end. So every payment scheme or silo is typically connected to every kind of legacy system in the bank, whether it's core, GL, FX, risk, warehousing, etc. Very, very complicated set of infrastructures and challenges for banks to maintain. And there's a huge cost to keeping that all running. So payment hubs have evolved as a response to managing those four challenges. So what we see and what we recommend to our customers is that not only do they need to meet those four challenges, but they also need to deliver a platform that can really unlock innovation in the payment space and help banks to remain relevant and also still deliver differentiated services. So simplifying your channel integration is the first step in that journey. And you will have lots of different channels and you want to simplify it down to a single point of entry as far as possible. The second is to have a standardized enterprise integration architecture. So instead of having all the payment silos connected into your legacy systems, you want to keep that centralized and standardized through one or two touch points per system. You want to move all of your payments logic from your channels into what we call the payment order management layer. And what that is going to do is allow you to do some very intelligent payment processing and routing scenarios. And so, for example, you'll be able to have a choice in real time about how the payment, which might have been initiated on a mobile phone, should it go through the bulk channel, go through the RTGS, cross-border, real time, or some other new payment type which might arise. So there's no fixed kind of routing or distribution which is determined in the channels. It's all worked out in real time. And you can set the criteria to be price driven, to be SLA driven, or whatsoever. And also, Michael mentioned there's a hell of a lot of innovation happening with SWIFT, both in cross-border and the RTGS space. But there's actually a lot of competition arriving into the cross-border payments market as well. So we have Visa with Earthport and Visa Payments Limited. You have MasterCard Send, and they're building out that capability with Vocalink quite extensively. You have a lot of other networks which are appearing with Ripple and Corda and so forth. So you will have choice as well in the different cross-border markets, and you want to be able to take advantage of that because each of those will offer different advantages and different price points and service levels for your customers. So these are the 4 things that we call out as a major characteristics of a successful payments transformation.
But what are some of the more common challenges that banks face in different channels? There are different systems, and many of them critical to their operations. How do they prioritize in terms of putting everything onto a kind of new platform?
I think historically in Asia, as a general statement, there hasn't been a lot of investment in payments infrastructure for the last 10, even maybe 20 years. Some countries have launched real-time payment scheme initiatives, Singapore, Malaysia, Thailand, Hong Kong, etc. But that wasn't quite enough to trigger a complete modernization initiative in banks. So typically they had point solutions which they would stand up, and they would be on newer infrastructure, or more likely than not, they would leverage the existing infrastructure. What we're seeing now with that perfect storm of compliance is that the catalyst for change is really too much than the existing banking systems and architectures can handle. The databases or the payments databases are not ISO 20022, so they have a major challenge in managing the data in and out and maintaining compliance. And depending on the kind of bank you are and whether you're doing intermediary banking, the challenge may be multiplied. With the arrival of real-time payments, you may have core banking servicing issues running 24/7. You may have liquidity issues. And if you're a bank which has a regional footprint, those challenges are multiplied if you want to maintain liquidity across your operational sphere. So they're the kind of things that we see, but we have impact into sanctions and screening. It's now a requirement of many regulators that you have to screen every single payment, and whether you need to do that in the full beauty, the full terror of ISO 20022 or a truncated form of that varies from market to market. So banks are also starting to address or implement data lakes as a step in collecting that data and then using that as a competitive advantage, because I like to say that banks are not banks anymore. Banks are software companies or technology companies because you're defined by your competition. Your competition, more often than not now, are highly leveraging data for real-time insights, and that's really going to drive a change in operating principles and models for banks, on the top of having a more agile infrastructure, of course.
And bank is also going through this digital transformation journey of your own. How are you prioritizing that payment integration? Today, payment being siloed in different systems. What is the imperative, if any, of integrating that into a common hub or platform, and leveraging the ability to have some of this capability, ISO 20022, the ability to have data lake?
Yes, it is something which Mbank is doing as well, considering how we should streamline. It looks a lot like the architecture which you put up. We have the payments orchestration. We're trying to move down all of our logic away from channels into a common layer. But a lot of this transformation comes with the promise of more of justifying the business case for this is really difficult. So putting in the new payments innovation or the new payment services into this and then slowly working on your legacy, it's a painful process, but it's something which we must do in order to be able to streamline and in a way try to see how we can rationalize costs by getting this done. There's an upfront cash ask, which is difficult. I think one of the ways by which we're trying to justify this is, and also create a new revenue, is sponsor banking. So when we look at our own payments infrastructure, which our customers use, one way to create more revenue or create more scale is to be a utility provider for some of the fintechs. So one of the things we do, for instance, is for all of the small TPAs, third-party settlers who try to provide settlement for the smaller merchants on the PayNet infrastructure, we help them with their settlement. We also provide access to the national payment settlement through our infrastructure to some of the wallet providers. So all of this increases the revenue that is coming through our payment systems and allows us to make these investments in a way. Yes. The next part of what you said, which is the data lake, is more interesting. That's easier to justify. For instance, when we ran a data model, I think this is not a surprise. One of the things which we did in our data modeling is we tried to look at what is the predicator for primary operating banking. What makes someone a primary operating customer of the bank, and what's the incremental revenue that you make from someone who's really into you. And this is again going back to the challenges which you said, which is how do you monetize payments, correct? Because the fee revenue is down to nothing. So you're running all of this and you're not making money on the payment per se. So some time ago, we were making the payments off the float. Now the NIMs are compressing there as well. So it's really about how you can bank the customer end to end, for which you need the data. So here, trying to analyze the payments that go through to understand why is money moving out of the bank, why is money moving into the bank, into customers' accounts, and what does that tell us about the life stage and the opportunity to grab business away, is something which is more interesting, and with tiny little experiments with data, something that we're doing as well. I think it's the secret. The big challenge here is that really payments for banks has been ceded to a lot of the non-bank entrants. And we're really in the second cycle of disruption where the disruptors themselves are getting disrupted. Yes, so it's a very interesting landscape. It's one where we found that being a backbone to some of these newcomers is also something which allows us to participate, even if indirectly. And if we keep the data and the data lake, how can we help understand trends from it and derive value from it?
That's very insightful. Now, in terms of where you are in that transformation, justifying, making a business case for it is very important. And does it make it easier for a bank like mBank in terms of where you are in terms of ranking, position yourself as a disruptor or challenger to the bigger banks? Does that make it kind of more of a stronger business case? And how are you doing? Are you doing big bank or are you doing in phases?
Definitely doing it in phases. Yes, there is also an advantage to be had being mid-sized, where you have less to lose and you can afford to take a few chances. Yes, so you can present yourself as more easily being able to take a leaf out of the disruptor's book in terms of the strategies we can adopt. But to be honest, it's also a challenge in terms of the way we can build scale as a mid-sized player to be able to justify what we're trying to do to transform. Therefore, we necessarily have to be agile. We necessarily have to take it up in small chunks. Almost every transformation that we're doing on the whole digital landscape in the data area and the payments landscape is bite-sized. It is agile, it's small pieces based on a hypothesis, prove it, then take the next chunk.
And I want to get back to Kun Tirat, Thai Commercial Bank. You are one of the big four in terms of your dominance of the market as well as in payments itself. Now, in terms, do you have a different situation when it comes to building a business case for your retail payment new system implementation? Do you face the similar issues and challenges, and how do you go about the phasing of your payment transformation project?
I think we are fortunate that during the prompt pay project, the protocol has been changed into ISO 20022. So we use that requirement to revamp the whole payment infrastructure, and we take that time to reevaluate all the pain point that we have in the our payment infrastructure. Didn't have that much challenge to get the budget required and get the sponsorship from all the senior executive and the board.
Maybe a comment from Pak Suryadi from CTBC Indonesia in terms of how are you approaching your payments transformation?
Okay, thank you, Bunping. So I would say that the Indonesian market is growing at the moment, but because of the pandemic, we are moving to a touchless condition, meaning that we are avoiding to go to the bank, anything like that. So the payment application is much more needed at the moment here in Indonesia. But each bank is a different case. Their client is different because they have maybe a big bank or a small bank or a very a captive bank like in CTBC at the moment. We are not only serving the Taiwanese client here in Indonesia, but also we are serving some of the local and SOE clients here in Indonesia. So our payment application at the moment is matching with the requirement of our client here and also the market here. So I would say that maybe because of the case of each bank is different, then we need to adjust with this kind of condition. But we have followed the needs of our each client in here, because we see this is not only to support our third-party funds because they want to put the money with us, but also to show that our bank has the capability to meet with its clients' need for this one. Again, using the technology is number one needed for this one, because looking at the future where all the fintech company already doing with the technology, so bank must also follow this condition. So I would say that here in Indonesia, we are following the payment technology needed for each bank.
Thank you, Pak Suryadi. Nathan, if I can also call on you to comment on the...
We're at the corporate banking side anyway. How we were able to tide over our customers' requirements. When it came to the recent lockdown that we had about mid of March already, the latter part in RCBC, talking about 6 months before the pandemic happened, we already digitized our corporate online banking enrollment forms, simply because we wanted our ability to enroll our customers in a nimble way. So that worked well for us. At the time that the lockdown was initiated in the Philippines, there were a lot of our corporate customers who started inquiring on how they can shift from their check-based payments to electronic funds transfer. So we do have recent domestic transfers, PesoNet and InstaPay, that's working wonders for our corporate clients now. So we were able to help our customers get enrolled in no time. No? So the influx of these queries, we were able to catch, and we were able to fulfill our promise to digitize our customers. It's a combination of old and new customers. When I say old customers, they have been already poised to do domestic EFT transactions, but they never tried it simply because there wasn't any compelling reason to do so. So they just stuck to analog payments like checks. But the big multinational companies that, they were trying to cope with the situation, how to pay their vendors, knowing that these multinational or conglomerate clients of ours are part of the essential industries to move about essentials that's necessary, food, logistics companies, the like. So our experience in terms of coping and helping our customers get by and be comfortable using our online banking system worked well. if at all there's a success story to RCBC. Um, Statistically, in the first 4 months of the pandemic, we're able to enroll about 500 to 600 of our corporate clients already. That's actually new clients, no, new clients. So we're very happy that we were able to catch the initial wave, the second wave, the third wave, um, and it's continued to sell on its own. Actually,
Okay.
even the customers of ours who have been hesitant to go online, those conservative clients, we tell them, "Are you comfortable buying online, or shopping online?" And when they say yes, it's essentially the same thing when you enroll to our EFT.
The payment business is also becoming harder to make money out of, right? From the low margins, as we have discussed, and how do players become challengers themselves, become disruptor, come up with new business model, come up with micro payment services that you can earn a fee, introduce value-added services to data that your payment infrastructure can provide you, in order to make that business case to move on to a new payment system. How are you making that decision today in the payment space?
We try to simplify the different type of payments system, the legacy payment system that we have, into a simpler architecture here in Bank Mandiri. We see the increasing trends in e-commerce payment, and then we collaborate with those e-commerce, whereby we provide them with also a facility whereby Mandiri customers, when they transact in those e-commerce, can use a facility, auto debit facility, embed in the e-commerce platform. Thus, the user experience is easier for them. And then the other thing that give us a more loyalty in terms of customer experience, not on the fee-based income, but rather more on the loyalty of the customer. But on the fee base, from the payment side, we try to increase the number of our branchless banking agents, whereby we provide a system for these agents, for them to be able to accept payments, multi-payments for those unbanked customers, like payment for electricity, telcos, or even other stuff like multi-finance loan payments, whereby the fee is we split between us and the agents. So those agents, in turn, they also happy because they get a additional fee for themselves as well. Rather than we cannot tap those unbankable people, we leverage our branches agent to help them, to help us in tapping these markets. We already see quite a significant traction of fee base coming from that. I think the challenge here is that this system that we have require a good internet or telco networks. While in Indonesia, we know the penetration of the internet is not 100% yet. So especially on the rural side, there are still some area that have no internet connections. But in those areas that we have internet connections, we try to penetrate the market using that.
And Dennis, the same question in terms of how are you looking at your payment transformation, just making the business case for it, and also how are you leveraging that to lower unit costs and kind of make more of a profitable payment business out of it?
On our end, we think that from a transactional fee out of the, all those, there's really not much margins. So actually, even up to today, Union Bank offers it for free, the InstaPay and PesoNet transactions. But with the volume, is you really get a lot of the data, but where the money really is in the loans. I think what we're seeing is a lot of the fintechs actually tries to generate a lot of transactions and get some transaction fee, it is proving not to be too sustainable, because there's a lot of costs to be incurred with the increase in transactions, etc. and whatnot. But those that can mine the data, make use of the data, and really provide different types of appropriate loans for them, I think is the way to go. There are lots of new improvements that's gonna come, for example, for InstaPay. So there's now what they call InstaPay 2.0. We are one of the pilot banks that is doing it. So InstaPay was really more fund transfer from one bank to another, and it's zero cost. So that made it a bit difficult for the other fintechs actually, because they used to generate a transaction fee out of that. But when the bank says, bank to bank transfer is zero cost, so a lot of the fintechs had to where do we get the revenues, right? But now we're looking at InstaPay, not just for fund transfer, but to do direct bills payment during COVID-19. And because of the unemployment, a lot of people are going to online selling. Now, how do they get payments? No, so with these electronic payments coming in, like InstaPay 2.0, so that's helping a lot. And what we're trying to do now is really help a lot of the online merchants through a very simplified process, allow them to accept payments, whether it's InstaPay PesoNet carded, Visa, MasterCard, or even EFIs. We're getting a lot of traction there. With our technology company UBX, they've introduced what we call BUX, BUX, so that allows a lot of the online merchants to be onboarded. We have lots of them in our ecosystem right now.
The legislation for more digital-only bank, right? Now converting some of the rural banking license to digital-only banks licenses. Now, going forward, how do you see that interplay between commercial banks and digital-only banks?
Some of the big banks, they look at what the fintechs do, and their mentality is, I'll learn more about it and I'll do it myself because I'm bigger, I have better resources, etc. And this is why we exposed our APIs. So all our capabilities, any fintechs, if you want to embed in your app, capability to do bills payment, fund transfer, buy load, etc. It's there. Use it. Our belief is that the bank has a unique value. It's been there for many years, but we think the fintechs have a unique value as well. They're very focused. They focus on one. They act quickly, and they can develop more quickly because of that. Now, our belief is to embrace that. And in our DNA we call it Ubuntu. But it's really working together. So when we work with fintechs, the statistics, of course, is that 85% of them will fail. Only 15% will survive. Our mentality is we want to help them. Don't just give them the fish for the loan, and expect them to pay. Teach them how to fish. Teach them how to survive, how to become competitive, how to become better. So we've created, for example, a platform for SMEs called Global Linker. There's about 60,000-70,000. It's like the LinkedIn of SMEs. And we're shouldering the cost. But they can sell their products to other SMEs. So we're creating those ecosystems and platforms for them. Also with the program we called Eureka. So there were lots of SMEs, they go to us for loans, etc. And then we said, but you don't have internet presence. How can you even survive? So we created online presence for them for free. Okay, so again, what I think what's more important is really the mentality. You really want the prosperity inclusion. You want to really strengthen the middle, economy. Provide the financial services to the mass market, and the only way to do that is through technology. Bring down your cost to a very minimal level so that you can offer those services for them.
How they are facing this whole move towards more digital payments, onboarding more customers digitally, facing competition, and also opportunities that are coming from e-commerce and fintech players. how do you see those developments?
It's important to sort of understand how you can work with some of the more original fintech. It's a matter of, the role that we can play for the industry and the 10,000 banks that are connected to the SWIFT network. There's scale. We operate as a cooperative. Many of the banks on this call actually own SWIFT, right? So there's lots of investment over many years to provide this safe, reliable, highly trusted and scaled infrastructure across the globe. There's a lot of commentary on low value retail transactions, but we didn't quite get to the kind of cross-border context of kind of linking up cross-border payments into instant systems. That's something we're very focused on at the moment, and helping the industry solve for standards. There's a real challenge on kind of real-time screening as well. And then the last thing I would say is we're quite pleased at the moment because we've been building out a new service which is focused on low-value payments. So here we're talking about cross-border payments at less than US $10,000 a transaction. And essentially, what we're trying to solve there is the upfront transparency and predictability to both the experience that a customer can expect with the payment and then also the fees that a customer will see as well. So we piloted this a couple of months ago, and we had banks joining all over the world to provide this more consistent low value payment experience. And what a customer of your financial institution will experience, right, is that upfront presentation of the fees. Over time, you'll have a lot more understanding of how long payments take. This all runs foundationally on the SWIFT GPI service that 70% of our SWIFT cross-border payments around the world now are running on SWIFT GPI, so they're tracked end-to-end. So it uses all of that to build out that low-value payment service as well.
Stephen, some comments in terms of what you hear from some of the banks, some of the challenges in terms of getting to the starting block for some of this payment infrastructure and transformation, justifying the cost and finding viability and or sustainable revenue for payment services.
What I would advise banks is to make sure that they look at it as not just a cost component, not just fixing something that's broken or not just doing or complying for complying's sake, but look at it strategically. What is the value of the payments to the business, and make sure that the investments in the payments transformation program are aligned in such a way that you're able to deliver revenues into the bank, and that could be exposed by APIs and other capabilities, but make sure that you can build those additional revenues to support the business case. If it's just about costs, it's not going to get anywhere. But it needs to be open, right? It needs to be data, and have all of those things ready, because you just don't know what's coming in payments. What we've learned over the last 15 years is that the space transforms itself dramatically and very quickly. So you need to be anticipating the unknown, let's say, and making sure that your architecture is able to support that.
Tivan, any kind of concluding remarks from you?
I think we hear the same story everywhere, right? So we are no different. We face the same challenge. I think it's the matter of execution.
And finally, I'll have Chintan to have a few words and before we close off.
I was quite happy to hear the views of all the participants today. Clearly validates that we are all on the same page, right? One, all of us clearly see the opportunity. There's an opportunity in terms of the entire new age payment methods, whether it's domestic or cross-border, and how it adds value for our clients. So I think nobody is lost on the business case. Everybody appreciates that and fully sees that opportunity, whether it's on the retail side or on the corporate side of the business. That's one. Second, about business case validation, but quite often in my view, it's not about business case validation, because we all believe sooner or later we need to be in it. You can't be out of an instant payment or a cross-border payment efficiency for long. Right? So I think the challenge is the prioritization of that payment use case or whatever you maybe are covering for that point, as compared to other conflicting priorities at that point. So we all have finite tech resources. We all have, and then there are various regulatory and non-regulatory book of work. And within all of that, how do you prioritize and take some strategic developments is where I think the challenge for all of us is. And I clearly see this to be a kind of medium-term challenge. It's not short-term. It's not 21. It's not 22. Perhaps 21 to 25. But that's where the fun is. So quite excited to be in this space.
Okay, now so the payment landscape continues to evolve. I think COVID-19 has been a catalyst for a lot more digital remote transactions. It also created a platform for greater collaboration. We see, example when Dennis mentioned that the number of digital transactions for the first time in the Philippines exceeded that of ATM transaction. This whole movement towards digital is clear to see, and it creates new business model to work with a whole host of service provider, deliver a new customer experience, and traditionally payments has always been a lot from the interest float part of the of the balance sheet, so to speak. With narrowing margin, there is a need to look at more creative areas to identify revenue opportunities. And as Vrinda shared with us, developing the business case for payment transformation is also a case for identifying areas where they can identify and achieve incremental revenue, and that's what they have achieved. And also to look at payment as a competitive advantage to disrupt the incumbents to be challengers themselves. So as payments evolve, this critical part of the business can be enabled by new infrastructure, new capabilities. As Michael from Swift mentioned, there are some of this capability that can be shared utilities that individual institutions do not need to kind of reinvent and individually invest. How a lot of that service or capability in sanctions in AML can be shared across industry. That is some of the opportunities that is available. But it's also time that the industry look at opportunities to leverage beyond just cost for payments. So and this is a continuing conversation which we will have with the industry as we cover this. So right now, let me just thank Tirat, Chintan, Stephen, and Michael for your insights, and for all our guests who've given us your views, for joining us today. And we hope that you have benefited for each other, a sharing of experiences. Okay, thank you, Chintan, and thank you everyone for your insights.